This conference will now be recorded.
All right. Well, welcome everybody. Thank you for taking a little bit of time on this fine Wednesday. We have a really nice, I think, discussion planned. And I just want to welcome everybody. We have a number of different students and individuals interested in consulting. We are excited to be able to host this. Our team at Archer Career is doing a lot of these types of activities for, thinking about consulting job searches, in general job searches. And I think it's a really unique opportunity to have a couple of consultants, ex-consultants, still thinking about strategy, but talk about a case. And then, just a couple of comments. So our team over the course of the summer, we ran a case competition. We had about 11 different teams from all across the country, students from Chicago Booth, Babson, University of Wisconsin, SMU, Emory, KGI out in California. And this was the case that we used. And we did this over 3 rounds and had some fantastic work that was done. One of the accomplishments, obviously, then is the team that won the case competition. And I just want to congratulate that group. It was a group of MBA students at the University of Wisconsin. They included Mark Nicola, Michael Turco, Partha Bakshar, Anuj Modi, and Ambika Kumar. So congratulations to that team, but even more so, everybody that participated, because it was a challenging case. We had everyone submit a PowerPoint for each of the 3 rounds and a video presentation, which I will also commend those groups, because a lot of the interviewing that's going to be done this fall, and I think probably in the coming couple of cycles, is going to be done this way. So that was a wonderful chance for everybody to, participate and also get some really solid focused interview prep. And, just in terms of our agenda, we're going to make a couple of quick introductions, tell you a little bit about us for those of you that are just learning about Archer Career for the first time, introduce our consultants. I'll call them consultants, even though they're each no longer with their firms. And then I'm going to give a little bit of an overview of the case, and then I'll facilitate this discussion about the key issues and eventually navigating us to some recommendations. And then, as I said, we'll leave some time at the end for questions. So just very quickly, my name is Pam Schilling. I'm the CEO of Archer Career. Some of you know us. We do some work at the University of Wisconsin and newly at Babson, so welcome to that group. I've done a lot of work over the years at the University of Chicago, Chicago Booth, so also welcome to all of you. And then others listening in, it's really nice to have you here. But, our attention is around early careers, helping individuals that are pursuing ambitious job searches. And then we have this expertise in consulting. So that's one of the things that I think we've been doing in a really excited fashion over the last 10 years. And then also just recently, literally in the last week, we launched our new case interview software application. Some of you have the opportunity to be using this. Some of you may have had the opportunity to test it for us. And we're excited. And it's also very timely because everything that we've built deals with online and virtual cases. So we think it's going to be a nice tool with the way that many of the consulting firms are moving. So with that, I'm going to let Ben and Matthew each introduce themselves. Just quickly to tell you about their background, and then I'll tell you just a little bit more about why I'm excited to have the both of them here tonight. So Ben, please.
Sure. Thanks, Pam. So hi, everyone. My name is Ben. I used to work at McKinsey. I spent about 2 years there. So we'd love to share any of the insights when it comes to applying for recruiting for consulting. I think one thing I would say is before going to McKinsey, I was actually at Harvard doing the Masters in Public Policy. So typically you wouldn't consider someone with a public policy degree going into consulting. So I guess what I want to share is that I think there are many what we call unconventional paths to the MBB firms. So I think that's something definitely to keep in mind if you want to learn more about how what we call non-traditional candidates get in. Happy to have a chat on it because I was one myself. So yeah, happy to be here with everyone.
Excellent. And Matthew.
Hi guys. So similar to Ben, a bit of a non-traditional path to consulting. So I was a government major in college and went straight to law school, sort of as one does when you have that kind of degree. Sort of figured out pretty quickly that I didn't want to stay a corporate lawyer. And for anyone here who is a lawyer or is on that path, I'm happy to chat offline. You can get my info off of Pam. But I left my job as a lawyer like midway through the first year. I was like, I definitely don't want to do this. So there's no point staying. And I jumped over to BCG. So I stayed there for 2 years. And then I'd always wanted to jump to startups. So I switched over to an insurtech company. So also, if you're interested in that path and that journey and how MBB is relevant for tech and kind of what roles are open for you, happy to talk about that as well. I explored several options. So pretty excited to hang out with you guys tonight and just sort of share insights and be a resource.
Fantastic. Yeah, and I'm actually happy that both Ben and Matthew alluded to this. They're not traditional consulting career path individuals because of their academic backgrounds. I agree. I'll third the comment that there are many different ways into consulting. Some of you are undergraduate students and you may have an opportunity to do some things with your academics and your work experience. Some of you are graduate students, MBAs, PhDs. We have a lot of different types of individuals that we have the opportunity to engage with. So, this is also a neat way to see just how people from different perspectives think about issues and think about business problems. And I did that in my own career. I'm the probably most traditional business person of the three of us. My background was in finance and technology, and then I did go and get my MBA at Booth, and then went into consulting with a couple of firms, including Strategy and PwC. So, and then my career led to entrepreneurship. So, there's lots of, I think, great backgrounds, and we're going to leverage all of that as we pursue this fun conversation about our case tonight. So with that, I'm going to just share a little bit about the business issue. Some of you joining us may have already had a chance to think about this. I've shared already a little bit of the background with Ben and Matthew, as well as some of the supporting data. So if there are things that they're talking about, realize that they're treating this more like a written case or a case that they would be working on as a client. So let me share a little bit about this. So the business issue that we're giving our attention to is the client who is a private equity firm. They're called Owl Ventures, and they happen to have an ownership stake in Camp Curie Newton. Camp Curie Newton, or CCN, they've been a growing kids STEAM camp. So science, technology, engineering, arts, and math. So this is kind of one of the really hot areas, if you will, for kids and their enrichment. They started in Palo Alto, and then they've been growing in the US for several years. As you can imagine, when COVID occurred this spring, the company was hit quite hard. They operate in-person camps, and they had a massive PR issue, and this caused a lot of problems for them. They had to cancel their camps. They had financial difficulties that prevented them from issuing refunds. This resulted in, a lot of PR issues and also a class action suit that came from the parents. At the same time, they had to move all their programming online. So now here we are, it's the fall, and they must start planning for 2021. The question that we're going to be thinking about is, how will they go about preparing their strategy for the coming year? Now in the virtual environment, they have a much larger competitive set. So we want to think about that, okay? So the first issue I'm going to pose, and I'm going to start with you, Ben, is to maybe walk through what are some of the big things that you think about that Owl Ventures would want to be focused on when they are thinking about the strategy for CCN in the coming year.
Got it. So maybe I would also situate the way I think about it in how you would be expected to answer in sort of the case interview, right? So I think the goal here is always to structure your answers in a way that's easy to understand. And this case, it looks simple, but but there are several layers to think about, right? And the goal, I think, of a successful interviewee needs to also lay out those layers very clearly so that it's easy to go through them. So looking at this case, I think there are largely three layers that we need to look at. I think one, we always have to look at what's urgent now, right? People have this misimpression that consultants are about abstract thinking. No, what's urgent is important as well. That drives business value. So the three parts, I think the first part would definitely be the crisis and PR. It's not a small deal that you had a class action lawsuit. So how do you deal with that? And to deal with the crisis PR, I think there are a few things they can break down to, right? There's the legal side of things, there's the reputational side of things, and also what are your current and new stakeholders. So that's what you got to think about in the sort of crisis PR. Then the second part is a strategy, right? For the company itself, with CCN. You know that COVID hit you and there was sort of what we call a shock to the system, in which you suddenly had a loss in profits and many unhappy customers. So that's a shock. The question though is once COVID ends, or when we see COVID end, what is sort of the strategy out of that, right? We've mentioned over here, the case mentioned that there is a online camp that could be done. The question really is to understand if that is the environment, maybe for the next year or two, how do we transit to that environment and what is our comparative advantage? Because now your competitors go from local Palo Alto community to a global one, right? So you've got to think of your comparative advantage in that area. And also think about after this is done, people will still want to go back to in-person. What is that transition plan? So how do you upsell during COVID so that you have a good transition plan into physical? So that's the second bucket. So the first bucket is crisis PR, second bucket is strategy, and then third bucket then actually goes back to our ventures themselves, right? How do resolution of the first two solve the third one? As a PE firm, they got to think about at the end of the day, what is the value that this company brings to the entire portfolio? So at that level, you got to think about in the post-COVID world, what is the landscape of this kind of industry, and also what are the synergies that this company can then fit into your overall portfolio, right? Do you still need a steam camp in your portfolio or not? And then finally, you got to think about what's the risk of having this kind of company in your portfolio. So I think these three levels: first one at the PR level, second one at the company strategy level, and third one at a portfolio PE level. These are the three things that I would look at in solving this case.
Awesome. So Matthew, I'm going to ask you to kind of do the same as Ben, and how might you have thought about this?
So I agree with Ben. I think broadly, I think I would have approached it slightly differently, not because I disagree with how Ben approached it, but maybe at least when I saw this is my first reaction, how I would think. I would actually cover almost identical issues, but I'd frame it slightly differently. So I'd say you have short-term issues, mid-term issues, and long-term issues as Owl Ventures, right? And your short-term immediate issues is your PR, is your crisis, and it's also about your technology, right? So I wouldn't bucket it necessarily. I bucket it in like how maybe the management team, presumably you're like a board observer and you're like in discussions with management, right? So like in the short term, what do you have to deal with? You have to deal with this lawsuit. You have to deal with a reputational loss, so there's a communications and marketing issue. And you also have to deal with investment to some extent. Like there is a financing question and an investments question as it pertains to technology. I have no idea whether CCN is set up to do remote. One of my best friend's mom is at a private school. She's a teacher at a private school. And like the sheer amount of technology that's required to run just a daily classroom is insane. It's not just Zoom. There's also like kids need to be issued iPads. There's cameras. There's just like all sorts of stuff and potential extra hires needs to happen, right? So I think like short term, that's what you need to deal with. You need to make sure that spring and summer of 2021, you're able to maintain your reputation, you solve this lawsuit, and you're able to get like at least summer of 2021 running. That's like your short-term goal. I think midterm goal, the question is, okay, after 2021, it's now January 2022. From 22 to 24, let's call that the midterm, what do you do? Like, what changes need to be made? So that's to Ben's strategy point, right? Like, you are now, like you said, approaching a global audience, or at least a national one. So you have to think about your go-to-market. There's a whole new segmentation and go-to-market that you need to figure out. Who are you best positioned to reach? Who are you now competing with at a national or global level? How do you leverage your existing assets? So meaning your brand, right? You're based in Palo Alto, that's got some cachet. How do you take that and compete? So there's a whole go-to-market segment there you need to figure out. There's a whole, like, you do STEAM, right? That stands for science, technology, engineering, art, and math. Do you want to be in all four of those things? Like, where and how do you compete? So to keep it short, it's a strategy assessment. And then the longer term question is, all right, stepping back at the big picture, do you still want to be in this? Like, is this still the investment that you thought it would be? And what do you do about that? Like, you presumably can't just write it off as a loss. You may, depending on like the size of your fund, right? But realistically, you're going to need to figure out some kind of exit strategy for this. How has COVID affected your exit strategy? Does it change the kind of people who are going to buy it? Does it change the kind of KPIs and metrics you need to buff up in order to actually get a sale? Does it change your your financing strategy? Do you need to restructure your debt in order to get this thing done at the kind of exit multiples that you need it to? So I structure it in those ways. I don't know. I think Ben's actually might be a bit cleaner, but that's just how I think about it. So that's how I would approach it.
So the nice thing is, I mean, you guys are not far off, but I think you're also demonstrating you don't have to have there's not a one size fits all for this. And, you're alluding to some things that are possible, potential. Matthew, one of the things that you're talking about is, you're bringing in some personal experience that you have about online teaching. I think these are all good things to take note of, because as consultants, there's these general ways of organization, there's prioritization, and then there's also kind of bringing in some what I'll call everyday knowledge, common knowledge, personal experience to give light to some of the things that you're going to investigate. So when you guys think about, go ahead, Matthew.
I think the reason why Ben's is cleaner in some ways, especially for consulting, is for those of you who are listening, and presumably you're all trying to get into MBB and some of these firms, the way Ben organized his thinking, the buckets he put into, you could theoretically be given as a project manager or engagement manager, or whatever they call it, McKinsey. You could be given 5 people, 4 people, 3 people, and you could split the case into 3 specific modules in the way Ben organized. I can see him nodding. And so that's why that's a very clean way of organizing it. Whereas I think the way I approach it is the way management would think about it, right? They'd be like, here's like priority number 1, then number 2, then number 3. Like, these are like, my time is going to be prioritized in this way. I'm not going to deal with number 2 until it gets to number 1. So part of it is like, I've left the consulting world, so I think and I'm in management, right? So I think in that way now. But absolutely, the cleaner way to do it as a consultant, because of the engagement model and the team structure that consulting firms go in on, his is probably the cleanest way to do it. I don't know if you want to weigh in, Ben, but.
No, agreed. I think both perspectives are important. And also, I think from the perspective of an interviewer, if you are upfront about how you're thinking about this, so if let's say like Matthew did, right, before he mentioned the structure, he said, I'm going to think from a management perspective, these are the 3 priorities, and then it's very clear the sort of persona you're taking, and that shows the empathy to the client that you show, and that actually works as well. So you just got to be clear and upfront about why you're choosing different frameworks.
Exactly. So the one thing I think I'm probably able to read a little bit between the lines, but I want to maybe have you guys articulate this a little bit. We hear so much in cases that we have to talk about hypotheses Where are you guys integrating hypotheses-led thinking or hypotheses? How are you trying to represent that at this point in the discussion?
Ben, do you want to go?
Yeah, sure. So hypotheses to me serves two purposes, right? First one is, as Pam said, it shows a bit of your inherent knowledge, or what we like to call business acumen, right? So for example, in this case, for example, or maybe or more a simpler case, someone says, if I increase the cost in the fee in the STEAM camp by 10%, how many customers do you think I'll lose? And if your ballpark figure is that, people love these things, so even if you increase the cost, it's not going to decrease consumption that much, that's the correct answer. If you say, if you're going to increase the cost, suddenly it's all going to, everyone's going to quit, then that shows that you don't have what we call business acumen. So hypotheses helps you narrow down the answer by showing business acumen. That's one, right? That you can draw links between what's going on in life. The second thing that it does is actually what we call drive the case. Because unless you suggest a hypothesis, you cannot advance the argument, right? You always be in the form of, I have this like nice three by three structure, and I know how to approach the case. But you're not actually advancing it because you're not putting a feet in the ground. So for example, one hypothesis that one can make is that, let's see, okay. So based on what we know, we can imagine that, as Matthew has mentioned, they fall into a bit of a debt issue. Financially, there might be some issues that CCN is facing, right? That's a hypothesis, and that's a valid one. So when you go down that path, then you can start thinking about, as Matthew suggested, starting thinking about restructuring your debt. What are the things you need to do there to get out of the sort of short-term issue? But if you don't do that, then you will sort of be stuck at the, oh, we got to look at financial statements, we got to look at profits, we got to look at strategy, and those are very abstract. You're not advancing the argument. So a hypothesis does that for you in a way that you are taking some risks, making an informed guess, but it drives the case towards an answer.
So Ben, just real quickly, I mean, there's not a lot of information that we're talking about. Why are you thinking about a hypothesis related to their debt and their financial situation? Like what sort of big picture is giving you a sense that might be an issue?
Right. So I think there is sort of a sequence, right, when you solve the case. I think the first part that we've done, which is to structure the case. So the purpose of structuring is to make sure you are what we call MICI, right? Mutually exclusive, comprehensively exhaustive. Then after you have a framework, then you have to go down, maybe you have three parts to it, and then you will pick one part, and based on your business acumen, you would think that this part is more important than the other, for example. Then you go down, right? I'm not saying that that would be the issue. I'm just saying that potentially, if within your three, like earlier Matt mentioned, right, like short-term issues, there is a PR issue, there is a sort of thinking about how do you get past a short term, and one of it was financial issues, right? And if that is what you think it's the highest, then you go down the hypothesis, let's look at this first, because unless we're afloat, we're gonna have to close down. So that's how I think from the process of the case, not that that's the answer, but from the process of the case, that's how you would take it.
Awesome. Matthew, your thoughts about hypothesis?
Yeah, so I'll answer in two different ways, right? One is the real world, and one is the case interview. So let's do the case interview first, because that's why you're all here. This will depend on the firm you're interviewing with. So Ben can speak a lot more clearly to what McKinsey did. I actually didn't apply to McKinsey, right? I didn't get an interview, one or the other, but I never interviewed with McKinsey. So I can't speak to it. I can speak to BCG. The hypothesis in the case interview is really to sort of show, it's to simulate the real world, which we'll get into. It's simulate what you would actually do in the real world, and to give them some sense that your business sense is not entirely out of whack. As soon as you've given a couple hypotheses, right? So I said short-term, mid-term, long-term. I said my hypothesis right off the bat is like, here are some of the critical issues you're going to have to look into. And once you've said all that in your framework, at least in the BCG case interview, they'll say, that's very interesting, and then they'll hand you data. So it's a trigger, at least at BCG. I think McKinsey's a little bit different. Ben can talk to it. but you give your hypothesis, they're not going to sit silently and force you to like keep going in a vacuum. At BCG, it's like great because it's a 15-minute interview for BCG. It's extremely short. They'll immediately either hand you documents or tell you what you need, and then you kind of go from there. So it's a gate, right? In the case interview stage. In the real world, and this is why they're simulating it. In the real world, even given that structure I've told you, there are 1,000 things you could look at, and you need to have some sense for what you're going to test. So, and again, it is business acumen, right? It is one thing where you've done enough cases, you've seen enough stuff, you have a sense for what priorities are going to come up, right? You've seen enough of companies in distress. The first thing you're going to think of is financing. And especially if it's a PE firm, absolutely they've loaded up with debt, right? It's one of those things where like you've seen enough of this, you just know. Like it should at least be in the back of your mind. Where are they getting their cash? Because you know there's going to be investments. Going remote, like sort of intuitively, camps are an in-person. Everyone's seen like the Parent Trap, right? You're like swimming in the creeks and you're like in the cabins. Like this summer camp, you're not necessarily super wired up, even at a STEM camp. So at the back of your mind, you're thinking there's going to be investments. Where is the cash coming from? They apparently don't have cash to issue refunds. So like, how are they going to invest on this? There's many things where as you're reading this, you got to think, God, there's a financing problem here. There's going to be some issue where someone's going to have to do a cost-benefit analysis, right? Like you see these things as you hear it. And so in real life, you want to test it. You would just guess that this would be important, and you go test it. And if you're wrong, great, you'll go down a different path. But at least you've like picked something productive to eliminate versus, I don't know, I'll look at all things. I'll give you a real world example. So just now, actually, today, I was sizing out something because I'm putting together a go-to-market for a thing in our company, right? And putting together a commercial strategy. And we have no idea how big the market is. Great, I'm going to go figure it out because I need to figure out what the priority sub-segments are. And you know the market is X, or you figure it out. Like I figured it out as X. And you know that's not helpful. You need to figure out sort of sub-segment of the market, what's bigger, what's smaller. And you know nothing, but you have to go in with a hypothesis that, you know what, it's probably organized in like X way. Maybe I'm wrong, right? Maybe it's called specialty and commercial lines of insurance. Maybe I'm wrong that it is not well divided by customer type. Maybe it's divided by vehicle type. I don't know, but those are my two hypotheses. Like one of those two is probably going to be a very fruitful way to split up the market. Turns out it is, right? Turns out doing it by customer type is extremely productive because you can actually group the pain points together. Great, but that's hypothesis. Or you could stare at this thing and be like, I don't know, we could slice this 1,000 different ways. So it's a way to save time and get you to move quickly. Does that answer the question?
Yeah, definitely. I mean, that's right. And I think, you guys both started out by saying this, there's a million things that we can explore. And you do have 15 or 20 minutes on the case. You can't explore everything. So you have to narrow and try to find the things that have the greatest impact.
Maybe Pam, if I can add something.
Please.
So I think Matt brought up a very good point, right? I think the BCG and McKinsey interview is very different. For some of you, or rather, overall it's quite similar, but there are some important nuances. So the McKinsey case interview, you have 40 minutes, 40. So it's not as yeah. So it typically wouldn't be as compressed. And it is similar that once you sort of have a structure, they sort of give you data. That part is similar, but what McKinsey likes to test for though is that they test for the hallmark of a good consultant is someone who can get to the heart of the issue without boiling the ocean. Because as we all said, right, there are 1,000 things to care about. There's idea of 80-20, right? How do you get to 80% of the problem with 20% of the effort? So how do you get there quickly? So the point of hypothesizing is to test whether you are able to cut through the noise and get to the answer quickly, right? The most frustrating thing clients have is that the consultants always goes in and say, can I get this data? Can I get the data? Can I get this data? Can I get the data? So McKinsey's interview, they're testing you for, can you be very concise in those requests? You do know which requests are not helpful, And therefore, if you're very concise and you're very sharp about it, McKinsey would like, it's helpful because then it means you're a good problem solver. And also you have a good experience for the client, right? Next time when the client hires you, you are not going to be the person that asks for a lot of data. You're just going to go to, if you give me this 1, 2, 3 piece of data, I can solve this problem for you. So that simplicity that you bring, the elegance that you bring, the problem solving is also what they're testing for.
That's right. I have one other kind of nuance that I'd like to have you guys address before we move forward a little bit. So our client in this situation is the private equity firm. The business that we're evaluating is the camp company, CCN. How does that affect your role on this consulting engagement and your thinking? You know, whether it's private equity in general or the fact that, you know, there's kind of a third party here that you also have as a stakeholder. Can you guys maybe comment on that? Matthew, do you have any points there?
I do. So I think in my structure, and you actually, since my structure really kind of mirrors Ben's in some way, at least in my structure, the first two parts, short-term, mid-term, you wouldn't interest align, right? Like short-term priority, it doesn't matter whether your client is a private equity firm or management. Like priority number one is 2021 summer has to go well. It doesn't matter. You're not going to offload this thing in that amount of time. Or maybe you can at a fire sale, but the point is you're not, right? Everybody needs this thing to work right now. Everyone's interests are aligned. In the midterm, you still need to get that set up online because even if you are, as a PE firm, trying to sell it, you're only going to sell it if you go to a buyer and tell them, listen, we have this comprehensive strategy. Here's kind of our expected metrics. Here's our forecast. Like in every scenario for both short-term and midterm, interests align. It isn't until you get to like a long-run analysis where you start to think, okay, I've helped set this business up for success, whether they stand on their own or are sold off to someone else or they stay with us, we've set them up fine. They stand on their own now. The question is, do our specific clients want to be part of that journey? And I think that's where it splits. And I think that's the only time when you start to think, look, is their success successful enough to meet your metrics as a PE firm? So I think that's where it diverges. But I think one of the nice parts about consulting, nice or bad, right? So for those of you who like win-wins, people who like enjoy that kind of situation, I think it is rare that as a consultant you are in a situation where you are in a contested situation between management and PEs. I think that's boring for some people who like prefer distressed investing, where as a creditor your win is potentially management's loss and you like that dynamic. That's rarely the case, I think, in consulting. And so I would just be very explicit that like by the time you get to long term, that's when you diverge, and now you're going to think very closely only about your PE firm's interests.
Ben, any other things to add?
Yeah, so I think pretty much agree with everything Matt said. I'm trying to think of what I can add here. So I think it's a bit different between how you would solve this kind of case at the interview. I'm mindful to keep this helpful, right? How you would solve this at the interview and versus how a consultant in the real life will do it. It's similar but a bit different, right? I think at a case interview, you have to remember that the PE firm is the client. So don't forget that this Cam Curie Newton is a stakeholder, but is ultimately not the client. So from the case interview perspective, you must always answer what the problem the client asks you, even though it might be tempting to like the way we talked about it, right? Like we want to go into PR issues, we're not going to strategy, but at the end of the day, the primary need is the PE firm. So you almost have to flip sort of my framework opposite on the other way, right? You'd be like, yeah, PE firm, what are your priorities? Thinking about post-COVID world, then you go down, how does this align with the company? This is because the client matters first. Then if you're interested in knowing how that plays out in the real world as a consultant, really if that is your client, you're going to spend most of the time in our ventures. And what's going to happen is that you don't really have much interface with CCN other than asking them certain questions, right? Like, as Matt said, the PE firm has certain metrics, like you need to get a certain amount of cash flow, yada, yada, yada. Then you basically will go down to Cam Curie and say, do you have a plan to get here? you won't typically be solving CamQuery's problems. You'll be solving the PE firm's problems, and then you just go there and get data and make sure that they have a plan, a credible plan to get there. That's all I would say.
So if you guys were moving forward and you wanted to think about some of the analysis that you were going to do, right? You've got to prioritize, you're trying to move to, address some of these issues that they have. Maybe, and Matthew, maybe I'll start with you. What out of the gate might be, 3 or 4 analysis that you'd want to do? What data would you want to get? What would you want to do with it? How would you use it?
Sure. So I think short term, you'd prioritize figuring out how to afford the technology, like assessing what kind of technology we have, what technology we don't have, and how much it would cost to get there, and then whether or not we have the funding and how we're going to get it, right? So I'd figure out like how much would it cost us to close the gap, and then what would our return on that be, right? Like what's our break even? How long would it take us in terms of not tuition, fees, whatever, would it take for us to, how many years, months, days, weeks, whatever time frame would it take us to make up that gap? And there's a qualitative analysis of like, do we want to just get enough to survive for 2021, or do we want to really set ourselves up for success and go digital? And like, what do those 2 price tags look like? How are those different? And what's the return on that look like? Right. So right off the bat, that's like the short-term one I care about. The PR stuff, the financing stuff, it's good to flag, and then you're going to hand it off, right? You're going to hand it off to your communications chief. That's like not our job, probably. And then the financing, you're going to go to CFO, and like you'll support however the hell they want you to, because out of scope happens. But you're not, and you would say that to laughter at the case interview, and that's good, and you should make that joke, right? But that's like the initial analysis. I think midterm, then there's the go-to-market analysis, right? Like now that we're go-to-market, like how many potential students are there? Who are our major competitors? How would we find that out? Who will we want to interview? What surveys can we run? Right? There's a number of analyses you can do just to figure out the size that digital has gone to, either gotten bigger or smaller. So there's the kind of number of go-to-market, and there's a separate issue of what do they want in this kind of digital experience, right? Because we're not doing just the short-term 2021 now, right? We're midterm for the next 4 years. What exactly do they need? And therefore, based on kind of what we can provide, based on our investments in technology, based on our unique whatever value proposition that we have, like our focus, how much of that population can we serve, and what can we reasonably expect in terms of annual recurring revenue, right? So that would be the next bit of things I do. And then long term, I'd be looking at our return for the PE clients. So you've now sort of solved their problems, interests now diverge, and you need to talk about the PE firm specifically. And it's like, okay, adjusted for debt, like what kind of returns is your fund required to produce? And based on these results that we forecasted, that we've just done all this analysis for, will CCN get you there? And if it won't, if it will, great. If it won't, what do we need to do? Is it a pricing thing? Like, is that a later sell of a pricing case we need to do? Or is it some fundamental change in strategy? Or is it, again, a financing thing, right? Do we lever up even more, load up on risk, and try to juice return? And those are the questions that you need to answer quantitatively, and then qualitatively you want to know, okay, like, how does this fit into the rest of your portfolio? Like, that is a real analysis of, do you have other tech investments that you could then sort of bring in? There's this bigger synergy of tech and education. Is this like an education tech fund? Like, what is the broader context of this fund, and how does this investment play into it, so that even if the return may not be great, maybe there's some role for it elsewhere, or maybe you can, right. So that would be kind of off the bat some big analysis, and then you would propose at the end, like, and obviously we would just have like an exit strategy discussion as a totally separate case, right? That's like a very long-term discussion of how do you get out of it, how do you identify buyers, blah, 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 blah. But right off the bat, I think those are the big ones.
Awesome. Ben, how about you? What would you want to be digging into?
Sure. So if we were to assume that our ventures is an activist investor, so they are actively involved in some of the business decisions of CCN, right? We have to assume that first. If that is the case, then going through the framework, right? I think one is the crisis PR, the other one is a strategy, then it's this sort of investment portfolio. I think the crisis PR, again, we need more details on the extent of the class action lawsuit. But to me, the analysis you need to do is really what is the damage from this crisis PR. I think on the one hand, there's a reputational damage, and two, there's a sort of financial damage. It was mentioned here that they run a rapidly growing STEAM camp. So I would be curious to know, does the class action lawsuit on this camp relate to other camps as well? How does it affect operations? If it's just one camp, then that's an easy problem. But if you're talking about they having like 10, 20 camps around the country, then that's a sort of a different scale of problem. So one, reputational spillovers, and two, then therefore the financial losses, right? You experience things like protests, protests against you. People are not going to be, don't want to be hired by you. Boycotts are going to happen. So you got to estimate a little bit how does that work, because then that goes directly to a lot of your suppliers, right? You might have to downscale operations. Then you would have reputational problems with your suppliers as well. So it's not just the consumers. So you have to size that issue first. Then after that, when you go to the strategy, you got to think about sort of the opportunities and the costs around it, right? So opportunity is this: now you're entering as a new player into this online world. As Matt mentioned, can you operate this realistically? Are you going to do well in this? And assuming you are going to do okay in this, what is the market share that you can actually meaningfully get for 2021? So we are talking about 1 year later, right? So what opportunity, what size of the market can you actually get? What kind of value proposition can you give? And then corollary to that is, therefore, what are the investments you need to make now, right? So in the end, you may come up to figure out that, this online thing is not going to work for you. The benefit doesn't outweigh the cost. You are better just sitting this out and wait till physical comes back, right? You don't know. You got to do that analysis, whether digital works well for you and whether the transition plan works well for you. And then finally, when you go to the sort of portfolio level, exactly as Matt said, you got to think about synergies, the education and the tech, and what are some of the KPIs you want from this side to cross subsidize and stuff like that. So those are kind of analysis. For me, I would focus on the first two because I think we have more data on those, and we'll proceed from there.
Yeah, and I think a couple things I would maybe add to it. I mean, I would go in and do some in-depth review of their financial statements. We were talking earlier about their possibility of really having debt issues. They could be running out of cash, so you could actually do some ratio analysis on the financial statements. The other thing that I would probably do that maybe commingles a couple things that Ben and Matthew have talked about, this camp business, and I'm a parent, so I'm kind of intimately familiar with it. You get into a camp at a really young age, and then I think the hope is that parents just sign up again next summer and the summer after that and the summer after that. It almost becomes an annuity. And so now you've had this shock to your revenue model. And one of the things that I would want to do is analyze kind of my existing customers, how many of them have been prior year customers, and then how many of them kind of converted into our online camps, and then do some projections over the next year or two. So you almost have this churn analysis that I think you could do with your customer base that could be very interesting. Again, it would lead into some of those things that you guys are talking about in terms of forecasting the business.
Mm-hmm. Agreed.
Agreed as well.
So let me throw out an event that actually happened to CCN and have you guys comment on it as we get into the discussion. I want to talk a little bit about the PR issues. So not only did they have this class action lawsuit, but in about mid-August, they actually had to declare Chapter 11. So the financial situation got too heavy. You guys both had the right idea. So now you've kind of had this, people aren't happy. And then for financial reasons, you have to go Chapter 11. So could one of you explain just, educate us a little bit on what Chapter 11 means, if that's something you can speak to? And then as we go into the PR, what does that do for the business and maybe the strategy going forward?
So I can talk about Chapter 11. So Chapter 11 is the U.S. bankruptcy system. It's unique and it's the best in the world because it prioritizes preserving the business as an ongoing operation versus in like, Ben, you're from Singapore, I assume, from your accent. And I grew up in Hong Kong. You go bankrupt, the rest of the world, you're screwed, right? You're just done. No one ever do business with you again. The assets get immediately sent off to the bank and sold off, and the whole thing is non-performing. So the difference here, and you should probably know this going into a case interviews, is Chapter 11 will basically freeze a company's obligations to pay its debt, and it'll bring everybody who has any kind of interest in the business to the table to negotiate. So all of a sudden, every creditor, and there's various types we don't want to get into. Anybody you owe money to, whether it's to customers or to banks or to people like you've given bonds to, they all come to the table and they all negotiate. The nice part is during Chapter 11, usually one of the existing lenders is tapped to give financing, bankruptcy financing. So during this whole process, there's going to be generally enough cash that the camp can continue to run. So theoretically, it can declare Chapter 11 and still run the camp in 2021 to meet its obligations. Because the idea is you want this business to keep generating cash because whatever like incremental bit of cash it generates is cash that can be sent to the creditors, right? And then once you formally get in Chapter 11, the judge will help the parties negotiate and figure out a plan to bring the business out. So you renegotiate all your debts, and you usually have an option to sell off different assets. So in the case of this camp, let's say they owned land, you could sell off the land. If they own the brand, maybe it's the brand that they sell off. So you can find ways to extract value out of this business to people, and usually auction, right? So that people, maybe another camp, there's like a camp owning holding company that owns like 10 other camps, they would find it valuable to buy the brand of camp whatever, CCN, right? So it'll go, all the assets get taken out to the person who would value it most. It's a great way to kind of make sure that CCN may no longer may die as far as Owl Ventures is concerned, but it'll live on with like Eagle Ventures, for example, right? That's it.
Nice. I have nothing to add. Amazing.
You're muted, Pam.
I had a herd of young people running by. So what does this bankruptcy do for CCN then? If I'm Owl Ventures, we know we had to do it. What does it sort of present to me in terms of the position of CCN, my strategy going forward? Where are some of the areas that it might be problematic? Ben, what would your thoughts be regarding kind of their next steps and going forward?
Matt, why don't you take this? I feel like you know much more about Chapter 11. So.
Okay. So options when they're in Chapter 11. I think you have to think about this on a couple different levels. The first one is, what does Chapter 11 do for customer trust? Because the product you're selling is children, and so you're asking people to trust their children to you. So there's a question of how does Chapter 11 and the perception of it affect your customer and demand. There is the question of what does Chapter 11 do for your finances going forward and what you want to do to structure that. And I think the third question is, again, I'm keeping this all like non-legal, whatever, but you would want to figure out if management is ever asked or the PE firm is asked, that you would want to figure out who would be the best person to own CCN, either as a whole or the pieces of it, like the land or the brand or the computers or whatever. You would do that analysis, number 3, to extract as much value as you could out of it. And so I've answered that question very much as with Owl Ventures as my client in mind, right? So number 1 is demand in the short run. Like, what will that do to my ability to sell this off and at least get something back? Like, assuming the equity isn't wiped out, like, what little bit of cash can I claw back, right, for number one? And then number two is, anyway, so the point is you just want to, this is testy, because you have to remember that you're representing the PE firm and not management. So I guess without more details, it'd be difficult to answer those questions, to actually do those analyses. But I think those are the ones, right? Because Chapter 11 of like a factory doesn't matter what the customers think. They don't care. They just want the factory up and running. They don't care who owns it. Camp, like, even if you're a sophisticated lawyer, sophisticated banker, you know all about Chapter 11, are you really going to send your kid to a bankrupt camp? You would just worry. There is still that stigma of quality associated with it. So I think you have to take very seriously what that would do, what kind of impact that would have on demand.
And I think if I can add one point, so I'm not familiar with Chapter 11 as a law, but typically when companies reach into bankruptcy cases, so I think everything that met it, but there's also one more thing that you want to consider, which is often they will be put on, I think in the US by a judge, in other parts of the world by regulators. They will be required to have a plan to get out of bankruptcy. And that's also where consultants are brought in, right? So consultants are brought into the cost transformation projects. So from that perspective, that's something that you want to think about as well. So how do you actually transform the cost? Not just extracting value from current assets, but also how do you transform the business entirely, and then have a credible sort of target by which you would sort of be afloat again. So that's another thing that you want to think about as you think through a case that has a bankruptcy chapter in it.
Yeah, and just as an interesting, personal experience, I was actually at United Airlines during their bankruptcy, along with McKinsey. So I was working at Huron. Huron was doing the technical, kind of the financial side of the restructuring. And then McKinsey was there doing more of the long-term business planning, the broader operational. So Ben's point is right. And I think it's just a kind of an interesting part how you'll see sometimes multiple firms at a client, especially clients in distress in that kind of a situation. So these are again, real issues.
Mm-hmm.
So Matthew, comment.
No, I said, yep.
Great. All right, guys. So, we haven't evaluated everything, but as you start, let's focus on the short term, 2021. You've got to think about some ideas for management, thinking about the private equity firms, interests. What things would you want to be building into the 2021 plan? What, if you had to brainstorm a few ideas in terms of CCN running their business, what might be some ideas for them? Ben, could I have you maybe start first?
Sure, but so Pam, I also realized that we've been speaking for an hour. Do you want us to take any questions first, or should we just push ahead?
I'm going to just have you guys address this, and then we're going to dive into some questions from the group.
Got it. Okay, so how they would start thinking about 2021. So I think first, if you structure it, I think first part is really what is your assessment of the situation in 2021. Then the second part is what are your opportunities in 2021, and then 3, what are the investments to get there in 2021. So the first part on assessment is you kind of have to make an educated guess, right? By 2021, it typically you're having summer camps. By June, what are your planning parameters, right? Is it gatherings of no less than 5? Is it 50? Is it 50 in open space but only 5 indoors? So you got to have some planning parameters around those. So there's your assessment of the situation. Then second, or it could be purely online, right? That's another option as well. Then second is assessment of opportunities, right? So looking at, and this goes beyond your current business model, right? I think that's one part. The other part is also who are your new partners now? Many schools, many other companies like camp companies like yourself would have been facing bankruptcy as well, likely. So what are new partners you can form? What are new geographies you can conquer? and you can acquire? What are new market segments, right? Maybe now people realize that home education, as Matt said, is not that easy, and so there are more parents willing to send their kids to camps, right? So what are the new markets you want to look at? And then the third part is really what's the cost to get there, and this goes to your go-to-market. So if you have new partnerships, how do you make sure that you're cementing them now, right? Starting the conversations now, looking out for which camps are filing Chapter 11s as well, and how do you get their customers? So those are things that I would look at.
Yeah, nothing really further to add other than to build on Ben's first point, second point, whatever, that there are different assumptions you need to make. And so this is an ideal situation to do some kind of scenario analysis, right? I would imagine in a 40-minute case, like if you're at McKinsey, you would be given the opportunity to at least set up what scenarios you'd want. Maybe you don't have time to analyze it. At BCG, you definitely wouldn't have time to analyze it, but you would want to say, I would do a scenario analysis. And these are kind of, my hypothesis is that these are kind of the three scenarios you would hit. And my hypothesis is, like, qualitatively, this is roughly what that would lead to. So you might say, look, I think this is going to be a situation where it's like gatherings of no more than 20 and it all has to be outdoors. So therefore, that will, and you identify three factors that would impact, right? Like investments in equipment, investments in digital, whatever. Like name a couple, two more, and you can't off the top of your head. And then be like high, medium, low. There's qualitatively, like, is this going to require a lot or not a lot, right? So if you're doing like, we're going in person and it's 50 people outdoors, well, okay, maybe it's like outdoor stuff, you need more investment. Digital, you don't. First is it's all digital. Okay, well, digital up and in-person supplies down. So you would just set up some kind of scenario analysis and realize you would actually put numbers behind this. Yeah.
So what do you guys think is the boldest thing that this camp could do? Last comment, and then as you guys are thinking about that, if anybody has any questions to ask, go ahead and just type in the chat that you have a question, and then I'll question in your first name if you don't have that, and then I'll call on you. So bold things. What do you think, Matthew? What might be the boldest thing they could do to be successful?
Boldest thing they could do would be to really truly embrace digital and set up. So I'll back up here, right? So you want to be bold, but you potentially want it to fit in this post-COVID world. So your kind of criteria for going bold would be, you'd want to be as digital as possible, and you want to be in some activity that is digital native. You don't want to be like, we're going to film you canoeing. That's not helpful, right? Something digital native. And number three, you want it to be somehow educational, or in some way, it's either educational or it just takes kids off the parents' hands. So it would need to meet these three criteria in order to go bold in a way that I feel would be successful. So my boldest idea would be to say, okay, for 2021, we do an experiment, and CCN is a full-time esports camp, because one, it fits with digital, right? Like whether or not the world comes back, you're all playing video games. So either you're playing video games in person with training, or you're video games remotely, right? Either way, video games is digital. Two, that's digital native. Delivery of goods, delivery of training, all the expectation is through a screen, and there's no downside to doing it in person versus not. Like this thing was always going to be delivered over a screen. And then number three is there's increasingly esports is getting attention. It's like a growing segment, right? There's growing attention on it. You can see parents like jumping at it, especially if it helps their kids kind of do something better that they're doing already. And it's a situation where some of the pro esports, whatever, they incorporate a lot of physical activity. A lot of it because you need reaction time and you need stamina to play well in these games. And so you would want to deliver them not just digital training, whatever, but also like a regimen of go outside and run on your own. But like these are the times you need to hit before you come back. So my boldest rack would be, let's fit those three criteria and let's do esports for a year. See what happens. What the hell? Like, it's 2021. Who knows? We can always go back in 2022. But everyone understands we got to do something different.
Awesome. Ben, how about you? Bold idea.
Yeah. So it depends so much on the financial statements and how much they lost through this lawsuit, right? So so one bold idea would be what Matt said, right? I would actually go the other way. and say that if we think of COVID as a short-term shock of 2 years, what it does is actually it shakes off all your competitors. The competitors, typically camps like this do not have a PE firm backing them. Typically it's a mom and pop kind of thing, or regional thing organized by a school, spin-off, 5 to 10 branches at max. So if you want to capitalize this opportunity for the longer term, because you know that this has been a growing trend, and COVID has accelerated sort of the desire for kids to get out of the home, then the bold idea would be take losses for 2 years, but use this time to really build partnerships and corner this entire market. And then when life returns to normal, you are the only one. And you are the sort of national player. So that to me would be the bold idea, and that of course comes with many caveats, right? One is that your reputation hasn't been too severely tarnished, and even if it is, Chapter 11 says that you can sell the name and have a new name, right? So one, not too tarnished. Two, the demand growth needs to be there and be real. And three, you're willing to stomach the losses of up to X% for the next 2 years. If those three conditions can be met, then you can definitely aim for this to be a national in-person thing. And then you can do the digital thing on the side because everyone's doing it anyway, as a way to upsell, but not as the core business model. So the reason I say that is because one way to get out of the reputational thing is to say that you are committed to your staff, you are committed to your people, and so you're not firing them. That helps you on the reputational front. Then you use that to your advantage later on to sort of build a brand around. Even when we get into trouble, we are not going to desert our people. So that's another way to look at it.
Great.
I like that.
Yes. So one of the questions I got was about if my bold idea was for the camp or for the PE fund. You know, definitely my question was targeted at the camp. You know, I think if we focused it on, you know, the PE fund and what actions they could take, it might have a different sort of lens to it, a different look to it. But I think as you guys were talking earlier, you know, the short term and the medium term very much has to focus on the business. You know, you as a PE firm, you can't exit your investment without the asset, you know, being maximized in terms of its value. So I think that what Matthew and Ben talked about, you know, that was definitely in the direction of what I was asking about. All right, so we have some great people joining us who've been listening in on this. What questions do you guys have?
And I'm going to quickly take a quick bio break. So I'll give me like 30 seconds or whatever.
No problem, Matthew. So you guys can gather those questions, throw them in the chat. You can do it privately. You can do it to me. And you know, certainly ask about the case, but you know, please ask about experiences. No questions are bad questions, as I like to always say. I'll tell you what, while I'm getting you guys, you know, settled, those of you on the webinar, tell us maybe just where you sit. If you type in the chat, just where are you right now geographically, and then what is your status? Are you a student, an undergrad? What school are you at? Are you a graduate student? Give us kind of a flavor of who's joining us. Make sure everybody's paying attention. That'll also help Ben and Matthew. Got quite a few.
All right, I'm back.
Excellent. I'm doing an inventory, Matthew, of who's listening with us and kind of what their background is real quickly.
Great.
Got a couple people from Boston, our Babson group, several people on the East Coast from the University of Chicago. Baton Rouge, down south. Nice. So any questions at all? It's a great opportunity to get into the minds of the consultants and how they think about these business issues. Oh, I've got somebody who's in Switzerland. Lovely.
Oh, I just figured out the chat function. There we go.
Yeah.
Cool.
Well, okay, so I'll throw out another question. What do you all take away from this? So 2 or 3 things that come to mind immediately that are takeaways from listening to how Ben and Matthew are talking about the case. Let people. All right. The question for each of you, if you can, and to what extent, could you maybe make a couple of comments about the culture, the characteristics of the firm that you worked for from your perspective? Could maybe each of you make a couple comments about that? Matthew, would you be willing to make a couple comments there?
Sure. Let's see, where do we start? I guess I'll go with, I think BCG is very focused on feedback. So if and when you come to BCG, I'm sure this is true of McKinsey too, but if and when you come to BCG, it was the fastest learning experience I've ever been to. And I went to prep school, I went to a top college, like I've been in places that were fast paced. BCG is the fastest in terms of learning and the speed at which they expect you to go up the learning curve. And they will facilitate that, right? They'll give you weekly feedback. They'll give you 2 weeks at minimum. You're getting feedback every 2 weeks, but otherwise like once a week. And they'll give you 3 things you're doing well, 3 things you need to improve on. As with all things, obviously, it'll differ a little bit manager to manager, and you do need to negotiate how much of this is a preference versus a real thing. But you'll pick up pretty quickly, like best practices. And so I think for BCG, come in with an open mind, willing to learn, and learn quickly. I think BCG is a place where you have really nice people. You can ask anybody anything, and people will make time. Like, people will not make time for anything else, but if you ask for help, they'll do it. They'll like take 10 minutes out, just like, no matter how busy or how close it is to crunch time, they're like, sure, I will help you. That's something I really appreciate, and you appreciate that more and more. I think when you're not at BCG, being able to just grab someone who's just like absolutely busy out of their mind and be like, listen, I just need like a thought partner for like 5 minutes. And like, I don't even know you, but sure, let's do it. People will do that. Or like, I tangentially heard that you would be a good person to talk to. Sure, let's take 10 minutes, let's talk. People are really helpful, and that's at the partner level all the way to the junior level, right? So I have called up senior partners who are super busy, and I'm like, can I just grab 10 minutes? I'm like, sure, chat with you for like 10, 15 minutes, and you'll get what you need. Good things come in 3. I can't think of a third thing. I'm trying to think of ways that might differentiate BCG from McKinsey, but like, I didn't work at McKinsey, so I don't know, but I can imagine these are all true for both firms. I'll give you one. This is a product of the way BCG is organized versus maybe the way McKinsey is. I think this is different. BCG is organized around regions. So we don't do global staffing. I see him nodding, so he knows this is true. I'm not going to be randomly pulled to London. I just won't. The cases will come up, and I can obviously, if I want to staff myself to it, I can, and I'll go to London, right? Like, international cases came up. I almost got into one, and then I actually backed out at the last minute. I didn't want to spend like 6 weeks in London. But you can. But because the revenue models are tied to the regions themselves, chances are you'll be staffed. There's a preference for local partner staffing local consultants. That tends to freak people out because people who don't work at BCG think, oh my God, so if I work in Chicago, does that mean I will only ever do cases in the Midwest? No, because these partners have clients all over the world, all over the US, right? So I've worked for local partners for cases in Boston and Miami and Memphis, California, right? Like their clients are all like the Gates Foundation, big client of BCG. There's a couple different relationship partners. Some of them are New York, some of them Chicago. So just because you work for Chicago doesn't mean you don't get to work with the Gates Foundation. You'll almost definitely get to work with the Gates Foundation because there's a ton of work, right? So that's, I think, one that's going to be a point of difference there. So throw it over to Ben.
Yeah, thanks. So I think for the first part, I think what Matt mentioned is quite similar. A lot of coaching, sharing by more senior people. So I remember going into consulting and having feedback every 2 weeks was kind of intense. But I realized that I've never learned so much in my professional life before, because it sort of works both ways, right? Like people before your senior gave them feedback, so they want to make sure they give you good feedback. So it's always good feedback. It's never meant in a mean way. It's totally meant to develop you. And after I left McKinsey, I realized how precious that actually was. That people were just invested in your growth, versus like trying to play politics. Not like that at all. People are pursuing how to help each other be better people. So I think that's similar. So that's my first takeaway. I think on the one point, what Matt mentioned on the regional and global staffing, I think there's a huge difference. So yeah, exactly as Matt said, and this is the only BCG difference I know. So I haven't worked there, but I'll try to compare. So the regional model is that, as Matt said, you staff locally. For us, we do global staffing, and that means that wherever you are, if you are the good fit for a project, McKinsey will fly you over. So I was based in Singapore. Yeah, I know, it's crazy, right? And then I did a project in Thailand. I did a project in China. I did a project in Vietnam. And then there was this. So how this plays out, right? It's very interesting. So there was once we had a client in Dubai who was looking for a cybersecurity guy, and I did cybersecurity. They looked around the firm and they said that many people are doing cybersecurity, but Ben, you seem to be the best one. And then just the next week, they just decided that, Ben, would you want to do this project? And I said, but it's all the way in Dubai, like Singapore to Dubai. They're like, don't worry, we'll make it happen as long as you're willing. So again, consent is important. As long as I was willing, McKinsey will fly me over. So then I spent 4 months in Dubai doing this cybersecurity thing because it's totally out of my region, but because the subject matter fit my interest and fit my expertise, McKinsey put me there. So it's good and bad. For people who don't like traveling too much, it's kind of intimidating, because you don't want to, some people tell me that they are frustrated with like hotel beds and hotel pillows and stuff like that. Like, it's a real concern. I get it. But for those of you who like traveling, like myself, it's actually a good thing. Because then when I was in Dubai, then over the weekend, I will hop over to Jordan, hop over to Sri Lanka, just to see stuff, right? So that, I think, is a major difference from a consultant's experience. I think the last thing I would say about McKinsey, not to mean as a contrast, but something that that was a takeaway for me, is that some of you may know, 20 years ago, 25 years ago, McKinsey had a huge PR issue on some of the insider trading stuff. So since then, McKinsey has really reformed itself into a company that is what they call values-based. So you go on the website, right? We have 15 values on how McKinsey consultants should conduct ourselves, and all these values are are crafted very carefully. And McKinsey people live by those values, right? So if any one point you exhibit behavior that is against those values, it's a no-go. So one of the values, for example, are obligation to dissent. So if the senior partner says something, the partner says something, everyone say A, but you firmly believe that you shouldn't do it, McKinsey has this value that says you have the obligation to say no. It's not that you have the right to say no, that is just basic, you have the obligation to. So the fact that you don't actually is bad on you, right? McKinsey wants to foster that kind of honest feedback, even though you're up against people higher ranks than you. Another thing that they say is also a non-hierarchical firm. So just because a partner says something doesn't mean that you cannot disagree or you cannot agree or you have no opinion, that you just take the senior partner's opinion. So those two values goes hand in hand to create this sort of open discussion culture. So how that plays out is that I distinctly remember when I walked into McKinsey office, the McKinsey sort of statement was there, right? the mission was there. It's a dual mission. So two missions in the mission statement. The first statement is we want to make long-lasting impact to our clients. So that part is sort of, everyone understands that. But the second part is the one that's the kicker. The second part, it says, and we also want to be a place that attracts, excites, develops, and retains exceptional people. So the first part of the mission is for clients. The second part of the mission is for its people. And so it cares a lot about its development to attract, excite, develop, and retain. Yeah, so that's sort of your growth as a consultant, right? So that's why I took away. It's probably not different from BCG, but at least I remember that we codified it to signal that we're really serious about it. And there were instances where a partner in my project behaved in a way that was against McKinsey's values, and we call him out on it, right? We're like, you cannot do this because you are a partner and you're a McKinsey person. How can you behave against the values, right? And then he apologized to us. So that's the kind of dynamic you get. It's very non-hierarchical. It tries to be, and it's very open discussion. So that was the greatest takeaway I took away from McKinsey.
That's great. And actually, Matthew, have an additional comment?
I was going to say, I had one thing to add, and it actually segues nicely into, I guess, Lester's answer or question. So if you want me to jump
I was
in,
just
can
going to
segue.
Yeah, so Lester has a question about sort of changing as a person, post-consulting, dealing with problems and competence. So please, Matthew.
So the question there is actually phrased about your professional life and your analytical sort of way of thinking. I'll address that, but I'll also address kind of a personal one too. So let's start with the segue, right? Like, here's one thing that I like about BCG. I'm sure McKinsey has a similar system. BCG takes work-life balance really seriously. Whether or not they actually succeed is up for debate, because at some point, like, the clients have the client's demands, you have to meet it. But they try, which, speaking as someone who used to work in corporate law and therefore in the same ecosystem as iBankers, like, they don't even try. Like, they don't even pretend to try. BCG at least tries, and I think they succeed half the time. So they heavily tie promotion and bonus to upward review, meaning my review of my project leader or engagement manager, it's called McKinsey, my upward review of my manager and then my upward review of the partner is like half of their bonus or something insane. It's like a large amount or more of their compensation, and it will absolutely delay their promotion by like significantly. If even like one or two are extremely bad, that's enough to like delay the promotion. So the strong incentives for the managers to treat you well, and the way BC tries to do it is every week there's an anonymous survey to the team, and you score it, like, how am I doing, red, green, yellow. And if you're, those surveys every week don't actually do anything to their compensation, but the clear signal to the manager of, like, if you give a damn about your bonus or your promotion, you may want to fix something because these people are about to screw you over post-case. So if you want to get paid, make them happy. And make them happy doesn't mean like give them less work. It's align expectations, right? Usually people show up as red if you've told them this is going to be an easy burn week and then they're working like 80-hour weeks. Like, that loss of expectations is what makes people upset. Whereas it gives you the opportunity to set norms where you tell your manager, like, this is the one or two things I care about. Like, I need you both to go to the gym every day. Other than that, I don't actually care. And your manager will level set with you, like, hey guys, this week I think we're all going to miss our KPIs. Like, we're not going to be able to hit the one thing we want. It's going to be a bad week, but I promise you we'll make it up for it next week. You do that, and the board shows like yellow or green, because it's like, yeah, I mean, it's not super sustainable, but you told us what it was, and I feel okay with it. That's a good manager, right? So BCG tries, and I know managers and so on who either fired or did not receive promotion, or the bonuses were heavily cut and so they left because of really bad upward review. So there are consequences. I've seen it happen. It's a great thing. Where that's affecting me in my personal life is, I think, professionally and personally, I've learned to set clear boundaries. You learn that as a consultant, where, like, if you don't set clear boundaries, your manager or your client will just walk all over you. Not because they're bad people, but because they are trying to get their money's worth out of you, and your job is to provide them leverage. Like, the more you do, the less they have to do, and the more they're able to focus on like higher level stuff. And so they're going to want to milk as much out of you as possible. The incentives are set up that way. And so at BCG, it's very encouraged for you to be very firm and respectful, but firm, like, this is my boundary. I need 10 hours of sleep. I just do. I will do whatever else it takes. Maybe I don't work on the weekends, but I am sleeping. Like, don't email me. I'm just not going to respond. Like, I'm out. Or if that gets breached, it's like, hey, this got breached. I understand why. It's because client bill was coming up. Next week, I need to get my sleep back. And like, be firm about enforcing those boundaries. And that's a huge thing that you don't often learn as a professional, because you're never encouraged to do so by your manager, and then taught how to do that in a professional and credible way. So I think that's huge. That's one of the things you don't understand how huge it is until you've learned it. And now all of a sudden you can do this all the time, everywhere. I have a healthier life for it. And then to answer your question about analytical stuff, and I'll keep that one short because it's exactly what you expect, right? I think you have a confidence. I think you're asking about confidence of, are you more confident dealing with senior stakeholders? I was a lawyer. I dealt with senior stakeholders all the time. Like, that's not what it was. The confidence is you can be thrown into random whatever and have the confidence to know, you know what, I will just break this problem down into some logical thing and into solvable pieces, and we'll solve the pieces and we'll get it done. So as a great example, right, earlier I mentioned like commercial specialty insurance. First of all, I'm not an insurance guy. That was not my background, but I'm now an insurance tech startup. And so every now and again, I get thrown into something totally new. And I'm like, great, we'll figure it out. Like, we'll just break this problem down into solvable bits, and we'll solve it all, and we'll get smart really quickly, and we'll be good. And when you come out of consulting, you've been tossed onto like 20 cases on topics you have no idea. Like, I was on agriculture tech. I grew up in Hong Kong. I don't know anything about corn, but you're like on this corn case. You got to get smart on corn, because you're going to be calling grain elevators. You don't know what that is, but you'll find out, right? You call it, you get smart really quickly, and then you ask all the right questions and you solve it. So the confidence there of learning how to break problems down into solvable bits is huge.
Yeah. Thanks, Matt. So I think going to echo what you said. Just to share sort of a personal anecdote, right? So after McKinsey, I went into public service because I believe in public impact. And so immediately, it was very clear when you're in a different environment, it's very hierarchical. Everyone's saying yes to the biggest boss, and I was different. And because of that, the CEO had all these like difficult questions that everyone doesn't know how to solve it. And I would be like, no, I can do it. I can solve it. Tell me the problem. Let's break it down into distinctive parts. I don't, like Matt said, I don't know a lot of these issues, but at least you can ask smart questions, push the hypothesis, get the right data, know how to leverage the stakeholders. And then suddenly I find myself as I became the special assistant to the CEO, because I could solve the problems that all his deputies couldn't solve. So immediately, professionally, you sort of move up in a company because you have this skill that no one else has. So that, I think, definitely is very helpful. So that's one, problem solving skill. I think second is sort of communication and stakeholder management, right? At McKinsey, we had sort of different buckets of skills that we would, we have 6 buckets of skills, and mine was what they call client counseling, which was, I was supposed to be very good at managing different stakeholders. And during my time at McKinsey, they have trained me such that every time I can walk into a dicey situation where people are shouting at each other and throwing things at each other, I will be the mediator, right? Because I started off as just being a good communicator, and then they sort of develop along the way. And I found myself, and because of the development at McKinsey, I walk into a lot of boardroom situations feeling very comfortable. People can start shouting, and I'll be very calm about it because I know how to deal with this, right? and yeah, and so professionally, I think that does a lot for you, right? In any situation, you can diffuse it. And of course, the typical things are true as well, right? Once you're at McKinsey, you get a lot of management consulting, not McKinsey, so I don't mean to make it as a comparison. Like once you're in these firms, a lot of people will start approaching you to recruit you, right? And so there's different exit opportunities. So I was doing cybersecurity, then I got invited got headhunted for like big tech companies, startup tech companies, that kind of thing. So suddenly companies that I didn't know a lot about wanted to be interested to interview me. And that's great, right? Because one, good for confidence, but two, also, oh, actually they see a certain skill set that I have that I can contribute to them that I didn't know to begin with. So that's helpful professionally. I think personally, what I really took away is exactly what Matthew said, right? That you learn how to draw boundaries. That's one of the hardest things. I was sharing this with a mentor, and the mentor said in his 26 years of legal life, he learned one lesson, which was how to say no. And he says, Ben, you learned that lesson 1 year in, right? That's way faster professional development than other people could have, because you were forced in an environment to learn how to say no professionally, politely, but being firm about it. And I think that really changes how I deal with my personal work-life balance issues as well. Yeah.
I mean, what you guys are saying, it's just so interesting, and I think the fact that both of you have kind of highlighted the personal aspects and how the work has really benefited you there, and you know, Ben, a couple of those comments that you're making about client counseling, I think this is the hidden skill set in consulting, and you guys can tell me if I'm off base on this. Organizations are collections of people. They're run by humans. Humans are good decision makers, bad decision makers. There's organizational politics. I mean, I think one of the things that you get really, really good at is kind of figuring out people and what motivates them and what makes them tick and how to influence. So there's the spreadsheet side of all the work, if you will. And then there's all these people things. And I just think that you get a much more rapid education in some of that than you might in other career pathways, especially early in your career.
I would agree. I think that's right.
So maybe just, you know, to wrap us up, because it's about 6:30. First of all, I'd love to have everybody who's on the call still, if you can, take yourself off mute, put your video on, and I'd love to give a round of applause to Matthew and Ben. Do some kind of collective thank you, and they can also see you guys. You know, I am very, very fortunate in my years of work to have met some just incredible people. I've had a chance to work with them. I've had a chance to get to know them. They're very generous to join our team in these types of programs. So Ben and Matthew, I appreciate you guys taking time out of your evening. And then just my last comment, I want to tell you guys, this is a real company. So my children were a part of Camp Galileo, and this business issue that we talked about tonight is exactly what happened to Camp Galileo. And I was one of the parents that found out that my kids' camp was canceled. Then they went into bankruptcy. And funny enough, my kids are actually upstairs on a Galileo video camp right now. So if you're curious and you want to find out about their bankruptcy filing, all that stuff is a matter of public record. So that's, you know, I think that's another representation of how great, you know, some of the case studies are that you all may face in the interview process. These are not made up. They're, you know, real life issues. And just the last comment I'll make is, I know one of the things about Matthew and Ben as I've gotten to know them, this is fun. I mean, you know, they're not going to do it day in and day out, but they both contribute to people looking at consulting careers because I think they feel these business issues are fun. I hope I'm not, you know, speaking incorrectly for both of you, but that's just been one of my observations getting to know them. So I thank you guys again. And any closing comments you want to make for everyone before we sign up for the evening?
I think thanks everyone for tuning in. It's been fun, like Pam said, and yeah, feel free to shoot me an email if you have any questions. Always happy to answer anything. At the end of the day, I think I enjoyed my experience at McKinsey, and for everyone who wants to enjoy the experience too, I'm more than happy to assist and help people get there as well. Yeah, thank you.
Thanks, Ben.
Yeah, I'll echo that. Thanks guys for coming. You can always get my information from Pam, so reach out. I enjoyed my time at BCG, not enough to stay, and so I'm always happy to talk about why, right? I'm happy to be open about it. BCG gave me some insanely good exit options, and the way it did Ben, the way he talked about. So sort of the beauty of this is even if you do this for 2 years, you're like, yeah, you know, I don't know if I want to do this forever. That's great. The firm loves it. The firm supports that. They will help you for the rest of your life. Like for the rest of my life, there is an alumni office with a career services arm that will help me. Like they have job listings only for BCG people, and they will help you with any kind of career credit. Like it's awesome. But I'm happy to talk about maybe why I left, and offline we can talk about it, and why. So why, even though I left, I still think it's an incredible place. So yeah, just reach out to Pam if you're interested.
Awesome. Thank you
Thanks, guys.
all. Enjoy. Have a great rest of the evening. Bye, everyone.
Thank you. See you guys.
Thanks, Pam.
Yeah.